S&P 500 is consolidating right now, and we are waiting to see the next targets for S&P. Stay until the end to see my opinion about this subject. Hello everyone and welcome back to my channel. Before starting the video, don't forget to leave a like, a comment and a subscribe, and let's get into it. S&P 500 is now consolidating at this zone at about $6,000, $6,800 at this zone, and is close to $7,000. But right now S&P is in a consolidation zone from December, is in this consolidation zone, and I think this consolidation zone is not ending right now. And in my opinion, right now S&P will consolidate to June to July, something like that, and after that we could see a downtrend, and the target for the downtrend is here at $4,800. This is the target for the downtrend, and I think this year we could see this target, and is about from the top about 31%, and I think this year we could see this target. Why? Because now Fed is keeping the interest rates unchanged, and maybe in June or July they will cut the rates, and they will not cut the rates very slow. They will cut the rates aggressively. Why? If we are using the Fed interest rates, we will see something similar to 2020 here. Where was the pandemic? And from here we had a push here, and after that a big downtrend for about 37%, which is a big downtrend for S&P 500. And after that S&P pushed very fast to $4,800 for this from this zone, and here was a consolidation on rate cuts, which is very important to see a push from the market. And right now we are here with the rate cuts at about 3.75% right now, and this will be maintained to June probably, or July, something like that. And after that we could see something similar to this zone, where the interest rates were maintained for about 5 to 6 months, and after that a big downtrend for interest rates to 0% or something like that, where everyone has money. But at this moment the USA economy is not that bad. The inflation is about 2.4%, the unemployment rate is about 2 point is not high, it's about 4.3% unemployment rate, and these dates are not very bad, but inflation at 2.4% is good. But in the next months we could see inflation at 1.8% or 1.9%, and this will be a problem because inflation at 2% is very good for US, but inflation at 1.3% or 1% is very bad because can go easily to a deflationary period, which is not very good. And right now we are looking to see this thing, because if we are seeing an inflationary period, the Fed will cut the interest rate very aggressively to see again 0% interest rates, and after that a consolidation zone for a long time. This is one scenario, and I'm looking for this thing, and I think this year we'll see if this scenario is good. But in the other case we can see other scenario, and let's put monthly. Monthly is very important, and here in 20s, here we had something something very interesting for interest rates, and here was something like that: consolidation, downtrend, consolidation, downtrend, upward trend, and not cutting very aggressively. And this was a moment when the price went up very fast. This is not my first scenario, but I'm looking for this thing if this happens. But right now my scenario is like that: consolidation here, downtrend, again consolidation at 0.0% or 0.25%. This is my first case. Let's see Tesla stock, which is here at about $400, something like that. And Tesla stock is now in a volatility zone here, volatility, and Tesla is in a volatility zone since 2021. We see that here is a big consolidation zone, and I think in bear market Tesla could go again to these targets at about $106. This is a good target to see, $106, and other target is here at about $173. Here is the target, one target. And I think from here Tesla could go something like that. My first zone to buy Tesla again is here at $270. This is the first zone to $220. This is my first zone to buy Tesla again. About 10% of the money I put for Tesla, and here will be the rest, because I think Tesla could go again to this zone, because here is a big volatility zone. To see something like that, again a downtrend very big to this zone, and after that an upward trend to $800 to $900. I think in the next bull market cycle we could see from Tesla $800 to $900. But we will see. First of all, Tesla is a good company, is in Nasdaq and S&P 500, and this thing is very good. And this is one of my favorite companies. The second one is Netflix, which is very low right now. Has a downtrend from $134 and now is at $75, which is very important. And I start buying Netflix at this point, but I think in the bear market Netflix could go to this zone at $30 to $40. This is one zone very important. But right now I'm buying Netflix for about 10% of my money allocated for Netflix, and the next zone will be here at $58 to about $54. This is other target, and here I will put about 20%, and after that at this zone I'm putting something extra, 70%, the rest of the money for Netflix. So first of all, I'm looking to see next targets. Netflix is low right now, and it's about 45% from the top level, and now is a good buy, because in the bear market cycle Netflix went down about 78%, something like that. I think now can go again something like that, 70% to 78, and this target will be here at $40 to about $33. This is the target I'm looking at, and here is a liquidity zone. I don't know if we hit this liquidity zone, but if Netflix is changing again to an upward trend, I will be interested to buy Netflix at this zone instead of buying here with all my money and after that going down again to these levels. That's why I'm buying here only 10% of my portfolio. Let's see Apple stock, which is the best stock to buy right now, but not in this moment. For if you want to have this stock for a decade, this is the best stock to buy. And right now, Apple stock is here at $267, and my targets for Apple stock are here at $190. This is a target for bear market, and other target will be here at $210. Apple stock is a very strong stock, and if you are looking for something good from Apple, it's that from 2020 it's about 379% from the bottom, and right now we could see a downtrend to these levels, and after that a double bottom here, and again a push to $330 to $350. This is my target for Apple stock. If we are looking at RSI is in a downtrend, MACD as well is in a downtrend, and we could see from Apple stock in the next months a downtrend because Apple stock is high from 2023 because from 2023 we are only in an upward trend and we have to see a downtrend and after that to reset the price for Apple and after that to have a push again. If you like this video, don't forget to leave a like and a comment and a subscribe.